Ladies and gentlemen, Greg Mikulowski from ForexLive.com. This is a Forex quick look. Take a look at the dollar versus yen. Today's date is December 20, 2024. The pair continues to move to the upside, helped by the Bank of Japan rate decision and trading here today. They kept rates unchanged, but did not hint of any sort of tightening going forward, at least in the beginning part of the new year. And that has traders selling the yen, buying the US dollar in the process. We'll talk about the technicals that are in play in this video, so let's get started. Looking at the daily chart, we have a swing area through here, which is defined by different swing highs going back in time. Here, form this ceiling. We did break above it at the beginning of, or the end of, middle of April, I should say, but failed pretty quickly and then rotated to the downside and then rotated back higher, lower, back higher, tried to move lower, but then moved above this level. And when the price came back down toward this level, we did find willing sellers here before pushing to the downside. So this area right here was, it comes in between 157.66 and 158.419. As you can see, the price rise in trading here today has been sharp and fast and trend-like, and that has taken the price to the low of this swing area. Currently trading just above the low of it at 157.66, trading around the 66 level. So right at that level, we're going to need to, if we see further upside momentum, look for the 158.419 level to perhaps give some traders some cause for pause if its price is going to stay below the extremes that we saw in trading this year. Taking a closer look at the hourly chart, you can see how the price action in trading yesterday and the day before did find support buyers near the 100-hour moving average on the corrective move of this trend move to the upside. That kept the buyers in play, and we saw the FOMC rate decision push the price higher, and that continued its move to the upside in trading here today. On the downside, the high price that we saw from November, it comes in at 156.74, and we did move up above it and then back below it in early U.S. trading, but before basing and running to the upside. So this 156.74 level is going to be a level of importance going forward, so be aware, be prepared. If we do break below that level, then traders will be disappointed of the break higher and perhaps start to rotate back down toward the 155.88 level. On a move below the 156.74 level. Taking another step even further into the 5-minute chart, in a trending move, you tend to see big sharp moves to the upside, corrective moves to the downside. If the price can hold above the 38.2, there's 50% retracement. I'd like to see of a trend move to the upside. That shows that the buyers are still in play. And indeed, in trading here today, the price low that we saw off of the corrective move to the downside here did stay above the 38.2% retracement, started a new trend move to the upside. So now with the new high price in play, if this is the high price in play at 81, what we'd not want to see is a price move below the 38.2, below the 50%, which also happens to correspond with these highs right through here. So that's a double reason why this the high price from earlier in the day should be a key support. Not only is it the prior high from earlier in the day, but also near the 50% retracement of the last move to the upside. So putting it another way, sellers have to prove that they can take back more control. If they can't get below the 38.2 of the last move to the upside on the intraday chart, are they taking control? The answer is no. Emphatically no. So it's safe to say that even though the price is testing some key resistance on the top side, we are in a trend market, and the price needs to get below 38.2, below the 50% retracement to prove that the sellers mean business and are taking back some control. So there you have it, a more detailed look at the dollar versus yen as it continues to trend move to the upside. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.